welcome. You're watching a fresh new edition of the Money Control Show. I'm Sakshi Batra and this is where we talk about macros, markets and money. On the show today, we will talk about the stress being seen in the debt funds and what should investors do about their existing investments. We'll also talk about the deficient monsoon rainfall and what is the impact it is likely to have on inflation and on economic growth. And we'll get you insights into the stock markets and the cues you need to watch out for in the coming week. Debt funds have been facing tough times since the last 8 months because of financial crunch, high debt and defaults in some cases. And even this week, after the unfortunate demise of our Cafe Coffee Day founder, we heard the news about LIC Mutual Fund taking a 50% haircut in the values of their holdings in Cafe Coffee Day. So the concerns are many, but worry not, as Money Control's personal finance editor, Kaizad Adajania, is in conversation with LIC Mutual Fund's Chief Investment Officer Debt, Marzban Irani, to understand what should investors do in this scenario. Let's just go across. Kaizad, over to you.
Thank you, Sakshi. Hi, Marzban.
Hi, Kaizad.
Welcome to the show.
Thank you.
Let me just first start by asking you, there's lots been happening on the debt funds. You're a debt fund manager. Obviously, you know what's happening on the ground. So tell us, is there more pain left in the system? I mean, just today we are, this whole week, we've been hearing about Cafe Coffee Day and how some fund houses have, brought down the value of their exposure to Cafe Coffee Day scripts and all. But of course, this is just one example. We've had many examples in the past. So is the worst yet to come, or have we seen the worst? What's your reading of the entire scenario?
Okay, so worst can come anytime. Actually, it's not any particular time that the worst can come. But I don't think it's over yet, the way something or the other is coming up. And it's not about one company having a problem. You know, it's about the percolating effect after something happens. So that is the concern. But here, having said that, I would just say that when the investors make their investments, what are the things they should, look into, because this can happen anytime. It's not that we are going through a credit drought period, and hence a lot of investors are asking us whether, now can we start investing? Is everything over? Okay. It's not like that. At any point in time, they should be alert as far as the fixed income is concerned. They should give more focus to the portfolio quality instead of the running yield, portfolio yield. So I think I would say that, people chasing returns leads to this. The common thing, the formula that we know is high risk, high returns. So when people are chasing high returns, obviously they are facing higher risk.
But when you as a fund manager are investing and managing your debt funds in these volatile times, do you have to take any additional precaution, any additional care to see that, you don't end up lending to, borrowers who are either suspect or either weak balance sheets?
Yeah, so any investment we have, our investment philosophy is like SLR process, safety first, then liquidity and returns. Okay. Because as we know, debt markets in India are not very liquid. Okay. So we first focus on safety of at the time of buying. We have a list of investments where we can invest only in those companies. Okay. We have a credit process by which it is approved by the credit committee. Okay. So our fund managers invest only in those companies. Okay. Then we look at the liquidity. As I said, the liquidity in debt market is not very deep, as far as this country is concerned. So we look at the liquidity, and at the end of the day, we are pass-through vehicles. Okay. So when the investor comes with a redemption, we are supposed to sell that at a good price and meet the redemption.
Correct. So you need to have the money to meet
to meet the
redemptions.
So liquidity is something, and obviously returns is surely that we look at, but that is the third criteria which we.
That's not the first criteria.
Yeah.
But so far, Marzban, I take your point that your portfolios haven't really been embroiled in any of the credit crisis that's been happening elsewhere in the funds. But looking back, of course, it's all very nice to say that you follow the SLR method, safety, liquidity, and returns in that order. But honestly speaking, Marzi, have you been a little lucky in terms of having avoided the entire credit crisis, or is there more to it? Okay,
so I would say, in most of the portfolios that I manage, there is not, I think, we go through the base process, before investing. So we take a lot of, pains before investing. After investing, you can't do anything.
Yeah.
So I would not say I have been a bit lucky, but as we were entering into this credit route kind of a situation, there are a lot of papers where we were investing, which we stopped investing. Okay. So say for example, in our liquid fund where we invest for 2 months, 1 month, So, there we were buying into a lot of papers, which we stopped investing once we thought that there can be any liquidity issue or any crisis kind of situation.
Okay.
So, once this type of scenario started, we have been a little cautious, and that has really helped.
Okay, okay. And so, tell me something as to how fund managers usually, like what happens behind the scenes, when normally one of these credit incidents come up. It's an open-ended fund, and constantly redemptions keep coming in, especially in these crisis times. People would want to take their money and go out. But at the same time, if fund managers, I'm not saying about you specifically, but any debt fund manager who's been stuck with these papers, you obviously can't sell these papers overnight. You would want to, but you cannot because there are no buyers over there. So there is some amount of liquidity. Illiquidity in that papers. What do you do? What do fund managers do in that case?
So, as you mentioned, the ideal thing would be to sell the paper at whatever price you get, because as we mentioned, there's no liquidity in the market. But the second option would be side pocketing, which is happening just now in the industry.
Yes.
But again, in case of side pocketing, you have to take the board approval, you have to give the exit option to the investors.
Yeah.
And suppose for one paper you do, say, side pocketing, what if you get another NPA in your portfolio or a third NPA? How many side pockets are you going to create?
Okay.
The third situation is, in certain AMCs, if there is a credit issue, the AMC has written off the, they bring the value to zero of that particular paper. And then whenever you get the money, whatever the NAV will jump to that extent. Now, to protect the existing investors, once you write off that paper, you have to put some load. So some AMCs have done that. They have put some exit load and all that.
Or you stop fresh investments.
Correct. It's a way of stopping fresh investment by putting the exit load. Okay. So no new investor will come and eat away into the returns of existing investors.
Marzi, there's one more method that some fund houses had adopted in the way past. In 2008 crisis, we saw one fund house particularly did the same thing just in the recent past. That's where the sponsor of the AMC comes in, and the sponsor takes over the bad paper to tide over the liquidity crisis, gives the money to the fund house, and the fund house can then pay the money back to the investor. Now, Marzban, you are a manager of LIC Mutual Fund, and you have one of the country's largest institutions as your sponsor. Does that give you any comfort?
Yeah, so coming to this type of question, if this type of situation occurs, I believe that, see, this is one of the case, which has happened. And the amount was, X amount, which the AMC could take the hit. Okay. So probably it was done. Nowadays, in the last 10 years, that you mentioned from 2008 till now, the size of the AMCs are increasing, the fund sizes are increasing. Okay. People are running 20,000, 30,000 crores worth of funds, each scheme. Now, 10% of that is around 2,000, 3,000 crores. Just imagine one paper goes for a toss. You think a AMC will take a 2,000 crore hit every time this happens? It's not a practical solution. People have to understand that there are some risks involved. Okay. So that's why I was emphasizing more on portfolio. Okay. That is what I feel. What people can take the comfort as far as the parentage is concerned. Yes, parentage is very important. So processes and all these will be, a robust process would be imbibed into their subsidiaries. Okay. So that is the comfort one can derive from a good
So basically
parentage.
Good parentage is what you're saying makes a difference in this particular case.
Because it will be worried about its reputation, so they will never adopt any wrong practices.
Okay, okay. Marzban, let's turn our attention to the forthcoming credit policy. People want to know whether there's going to be a rate cut or whether there's going to be, sustenance of the same rates. What do you think? I mean, Finance Minister has said that rate cut is required for the economy. What do you see?
I think more than Finance Ministry, if you look at the MPC last minutes, it's very clear that they are tilted more towards growth than the inflation. Our headline inflation has been under control, and there is comfort from the RBI side. Okay. I think it is the growth that is suffering, and not only on the domestic front, globally also there are concerns as far as growth is concerned. Okay. So, I think there should be a probable cut as far as the policy is concerned. The market has also discounted that in the current prices. Okay. In fact, this cut doesn't turn up, then there will be some correction in the yields. Okay. So I don't think that is going to happen. Currently, there is some concern on the growth, so we are expecting a cut over there.
So you're expecting a rate cut, Marzban, on the 7th of August credit policy. Okay, but one last question before I let you go, Marzban. Again, coming back to liquid funds, recently there was SEBI intervened and gave a whole host of new guidelines for liquid funds, and it said that all liquid funds will have to have a compulsory graded exit load structure for the first 7 days. So do you think that this is going to, have more volatility? That's one, by the way, that's one measure. Second measure is also all the securities within a liquid fund have to be marked to market. So both these measures, Marzban, how do you think it's going to affect the liquid funds?
Yeah. So in the last 2 decades that I've been in this industry, whatever measures SEBI has taken, they are really excellent. I should praise SEBI for that. Making it mark to market, basically what is the difference between M0 and M2M? Suppose you had a 60-day paper earlier in your portfolio and it was valued at 8%. Something happens in the market and the yield goes to say 9%. Then your paper continues to remain at 8. So it was not a correct valuation.
So devoid of reality.
Yeah. So now they have brought it, all your money market papers are mark to market. So that is a realistic valuation as to the NAV which comes out.
More volatility?
So that will lead to volatility, but it is the right, pricing that should come out as a NAV. Okay. And coming to the 7-day load and all that, SEBI is of the opinion that those investors who want to come for 1 day, there is an overnight fund for those investors. So that's why liquid should be a 7-day kind of investment. So that is why they are trying to introduce that going ahead. So I think that is also a good measure from the regulator's point of view.
Okay. Thank you, Marzban, for sharing your views.
Thank you.
And that's all from our side. Sakshi, over to you. Thank you.
Well, thank you, Kaizad and Mr. Irani, for that very insightful discussion. Moving on, India has received below average rainfall since the monsoon season began on June 1st. Watch this insight to know the significance of monsoon rainfall. Monsoon rains for the June to September season have been about 14% below normal so far. The India Meteorological Department has forecast that the situation is likely to improve during August. A fresh low-pressure area is expected to form over the northwest Bay of Bengal. This would strengthen the monsoon current and bring increased rainfall activity over large parts of central peninsular and North India. About 60% of India's agriculture is rain-fed and sufficient residual soil moisture is necessary for sowing. According to the Ministry of Agriculture, the accumulated acreage deficit has come down to 7%. For a normal kharif crop, sowing should ideally be completed by the first week of August. Normal monsoon rains are also critical for replenishing water reservoirs necessary for irrigation and power generation. As of July 25, 2019, the live storage available in these 100 reservoirs is 63% of the live storage of corresponding period of last year and 71% of storage of average of last 10 years. The overall storage position is less than the corresponding period of last year in the country as a whole and is also less than the average storage of last 10 years during the corresponding period. Despite heavy rains across the country for over a week, rains are 14% below normal. To discuss the risks associated with below normal rainfall and the outlook on monsoon rains from here, I have with me Gaurav Choudhury, Deputy Executive Editor of Moneycontrol. Thanks a lot, Gaurav. Appreciate you joining in. So tell us and all the viewers as well, that is deficient monsoon that we've seen so far a big cause of concern?
The monsoon rain actually have gathered pace while it arrived late, and it was considerably weak in the month of June. It has gathered pace thereafter significantly, and that rapidity is probably going to extend right until August and until the middle of September, when it starts retreating. Right. By the end of the first week of August, probably the monsoon deficit would have come down to much below 10%, and that is good news. Okay. Because that is good news on various fronts. That is good news on the agricultural front, and that is good news on so far as the water levels of reservoirs are concerned. Concern which is important for both irrigation and power. But what is important to note here is that the Indian Meteorological Department, which is often referred to as the Met Department, has decided to form a panel of specialists. Okay. And probably we are looking at a new timetable of monsoon arrival. The current timetable of monsoon arrival in India, monsoon hits mainland India on June 1 and then spreads across covers the whole of country by the first week of
Right,
July.
right.
That timetable has been followed for almost 40-50 years now. But given the changes in climatic conditions and also patterns in monsoon arrival across various parts of the country,
Sure.
we are probably looking at a new monsoon timetable, which is going to be important because this year, for instance, rains arrived in Mumbai in around the third week of June,
Correct.
whereas people in Mumbai expect monsoon rains to arrive around 10th of June,
Right.
and that seems to be that pattern seems to be over a very long period of time. That pattern seems to be quite consistent. So the panel of specialists are going to give a new report, a report on which a new timetable probably would be recommended. For farmers, it's important because if they know that monsoon arrival is going to be different from the previous year,
Yeah.
and that's a pattern that is likely to persist, then they can plan their sowing, sowing of crop, etc., and other plans accordingly.
Absolutely. And like you also pointed out about the sowing and the production, we have earlier also talked about that how monsoon rainfall and this season is very important for the summer sown kharif crop as well. But so far, because the rainfall has been deficient to about 14 to 15%, what we have seen is that wilting of these crops has also happened, and also the production slump has also been seen. So which are the crops that are seeing this production slump right now?
So the most important crop in this season is the paddy crop, which is rice.
Right.
And rice, as we know, requires knee-deep water. So if there is a shortfall in rain, and 60% of Indian agriculture is monsoon dependent or rain dependent, and about 70% of India's total agriculture food grain production comes from the summer sown kharif crop.
Sure.
So that is it's absolutely important for rains to be abundant, and two, to be evenly distributed across the country. What the Met Department has been keen to know is whether the rain will be the monsoon rain will be able to cover the deficiency for this year by the first week of August.
Right.
That is absolutely critical because it is important for farmers to complete sowing by the first week of August.
Right.
If they cannot finish sowing by the first week of August, then they're probably looking at a kind of a very deficient harvest. That is something that could have implications across the broader economy, not just to speak of food inflation. It could lead to a spike in food inflation. But going by the recent trends of the last 10 to 15 days, I think sowing should be over by the first week of August, which is good news. But it was a bit of a concern, at least until the last week of June.
Right. And Gaurav, you did talk about food inflation, and that is what we are seeing in the trends that we are seeing in the retail food inflation and the wholesale food inflation as well. They're all above like 11, 12 or 13 months high right now. So even when we look at this current deficient monsoon, are we staring at a higher inflation from here on as well?
So given the fact that monsoon actually has been able to cover a lot of deficiency over the last 4 weeks, and by the time the first week of August ends, I think the deficiency levels will come down to much below 10%, I think around middling of single digits.
Right.
I think the possibility of a spike in food inflation because of low rainfall is unlikely to happen, given the fact that the deficiency has been covered very significantly over the last 4 weeks. But that said, farmers will be keeping their fingers crossed, and policymakers will also be keeping their fingers crossed. And we know for a fact that the RBI is going to meet next week for its monetary policy review. It'll be the Monetary Policy Committee will be keeping their one eye. The committee will be keeping its one eye above the shoulder on which way the monsoon rains are moving, because that's going to have implications on the food prices, which as a corollary is also going to have some implication on the headline inflation number.
And what would you expect from the RBI's meet on the 8th of August? Are they going to bite the bullet yet again after 3 times already cutting the rates?
I would assume so, because inflation remains very benign, and slowdown persists. In fact, slowdown by available proxy indicators, it seems the slowdown has got even deeper. So the RBI probably is going to go for another rate cut, and as a move to make capital costs cheaper for industry to borrow and invest. And the problem, however, is that investment may not take place immediately, because there is a bit of a lack of demand in the economy. If you go by, say, for instance, car sales numbers, that's been very tepid for a very long time. So people aren't buying, and if they're deferring their consumption, that demand will first have to pick up, and subsequent to that, investment will probably take place. But be that as it may, given the benign inflation levels and also persistent slowdown, I would expect RBI to go for a rate cut again.
Absolutely, and you're talking about the right points that we are seeing right now, because we are already in the middle of a slowing economy. So I would want you to explain to all our viewers what is the significance of these monsoon rainfalls when you talk about the macroeconomic point of view or the growth point of view.
Yeah, so clearly, I mean, the summer rains are it's far more important. It's the lifeblood of the Indian economy, because each time the summer rain fails or it's deficient or it's scanty, we have observed that it has implications across the broader economy. It starts with not just with food inflation, which is the obvious implication, but it also has implications across the industrial sector. Say, for instance, about 40% of motorcycles sold are in rural areas. Houses that are built get affected. It affects cement sales, for instance, because of that. Gold sales get affected, and also consumer durables like televisions and microwave ovens or refrigerators, which are very widely sold in rural areas. If farm income actually slows down or in fact falls because of poor monsoon, it will have implications across a large number of sectors across the economy, and that can clearly have an impact on the headline GDP growth rate, which is not a good thing to have, given the fact that the external conditions are not very favorable, and which is not under India's control. And if we lead into if poor rains actually compounds the problem, that is something that policymakers would not like to deal with.
Absolutely. And lastly, I have to ask you, Gaurav, about the outlook on the monsoons. What is the IMD? Because already we have seen two different versions. From the IMD, it was already expected a near normal monsoon this time around, but the SkyMet had actually predicted a below normal monsoon rainfall. So far it's deficient. We are hopeful that the next 2 weeks will pick up in the first half of August for sure. But what is the outlook really, and is there any fear of drought-like situation yet again?
No, I don't think there's a drought-like situation that is likely to happen this year. As I said, deficiency has been covered very significantly over the last 4 weeks, and the IMD expects the deficiency to come down to much below 10% by the first week of August. In fact, according to early predictions of IMD, for the month of August, they're expecting the August rains to be 99% of the normal rainfall. So if it all depends on how plentifully it rains in August, which the IMD believes it's going to be, then there is clearly no possibility of a drought-like situation. But that said, August rains are critical, and that is what both the IMD and the farmers are keenly looking out to.
All right. Thanks a lot then, Gaurav, for sharing all that insight with us. Well, deficient monsoon rainfall is certainly not good news, as it can not only weigh on the rural income but can also stoke higher inflation, and it could further dent the private consumption, which is already hit by low demand and slowing economy. But for now, we'll keep our fingers crossed for better rains in the month of August. Moving on to markets now, Santosh Nair, editor of Moneycontrol, joins in with all the action in the stock markets and cues for the week ahead. Thanks a lot, Santosh, for joining in. Well, a sea of red on the D Street is what we saw this week. Nifty also slipped below 11,000. Now, what are the big concerns for the markets right now?
Well, yes, Sakshi, it's raining bad news in the economy, and the stock market is just reflecting that. The latest trigger for the sell-off that you saw starting from Thursday is because of the hawkish commentary by Fed, even though it cut interest rates by 25 bips. So market is interpreting it as a signal that there may not be further rate cuts anytime soon. So global liquidity could shrink a little bit, and that spells bad news for most emerging markets. But there have been quite a few other triggers as well. The main one being the foreign investors' disappointment over the surcharge that was levied in the budget. So there's a lot of disappointment over that, because of which you're seeing a fair bit of selling over the last month. They were now net pulled out close to about $2 billion since the budget. And in more bad news, in addition to the rather tepid earnings and very cautious management commentary in earnings calls, you're also seeing that mutual fund inflows, that now slowly seems to be coming under a little bit of strain if one were to go by the closure of SIP accounts in both May and June. So, so far what's been really supporting the market despite selling from foreign funds is that you're seeing a fair bit of mutual fund money coming into the market, but close to about 5.5 lakh SIP accounts were closed each in May and June. So that's a bit of a worry. In addition, you have the credit, you have money becoming very expensive. Companies are not able to raise money as quickly as they were able to till a few months back. You're seeing stress in almost all the major sectors. So much of the bad news is already there reflected in the prices. but investors are cautious. Ideally, you would think that this is the time when you should be buying, but it also does happen that when things are looking gloomy, probably investors tend to hold back because they fear that things could get worse from here, and there are no indications of anything getting better at this point.
All right, Santosh, then what were the earnings highlights this week and what are the big triggers to watch out for in the coming week?
So, more than earnings, the market is now focused on macro indicators. So, for instance, the car sales for the month of July were quite bad. So, that points to more pain in the auto sector. Same is the case with most other sectors also. In fact, markets will be closely watching at macro indicators over the next few weeks to see the health of the economy. I think more than earnings, that is the big trigger, because it's almost accepted that earnings are not going to pick up anytime soon. So, if there is some positive news, at least as far as the economy goes, probably that should help in improving sentiment a bit.
Well, thanks a lot, Santosh, for sharing with us all those details. And with that, it's also a wrap here on the Money Control Show. But you can catch up on all the news from the world of business and finance on our digital platform, moneycontrol.com. Many thanks for tuning in.